Today I'm going to show you how traders use VWAP and anchored VWAP together with pivot highs and pivot lows. We're going to make sense out of the price action and to take the mystery out of technical analysis. On this chart, I've displayed VWAP as a blue line. VWAP stands for volume weighted average price, and it shows us the average price traded weighted by volume across the day. So when prices are above the VWAP, buyers believe they should be buyers because buyers are in control. When below, sellers have the upper hand. But VWAP isn't predictive. It's just reflecting what prices already told us. So as we can see, on this day, prices were above the VWAP, and this VWAP adjusts every day for intraday traders based on the start of the day. And we're also looking at these pivot highs and pivot lows that are marked here by the red dots and the green dots. Are the dots making higher highs and higher lows? If they are, prices are going to be above the VWAP that day. Now, as we look at scrolling back on different days, you can see prices were above the VWAP. On this day, it was below the VWAP, but prices had broken down, and they were in a downtrend, lower pivot highs and lower pivot lows. And if this visual representation of what's going on in the chart is helpful to help speed up the analysis, great, use it. So we use moving averages as a visual aid, as we call it. Are prices above the moving average, below the moving average? Are they extended from the moving average? Help speed things up. Let's take a look at anchored VWAP. And scroll this up. So with anchored VWAP, traders pick a major event, whether that's an earnings report, a Fed announcement, and this time it was a sell-off in April where the markets bottomed and they began to trade. Which event do you pick? I don't know what events there were on these little gap down days, but here's where you start getting into the subjectivity of it. And so I just picked that day because it gapped down and it went up, and prices are above the anchored VWAP. But the pivot highs and pivot lows are making higher highs and higher lows. This major support point, the low prior to the higher high, and as it started from here, as you move up, this was the first time that major support was violated. It was still above the anchored VWAP picked from this location. Let's pick a different location. Well, if we pick this one, prices broke down below it. And you can see it becomes confusing as to where you're going to pick different spots versus recognizing prices are making pivot highs and pivot lows. If it closes below a pivot low, and this one did not close below it, it was just right there, and it sprung right back up again. But even if it closed below it, what are you going to do at that point? You're going to look, you should be looking for a candlestick setup that confirms your bias. Now, if a trend is broken, price is closing below a major support point, we're going to look for sell setups. And at that point, whether you're using the VWAP or you're using what I'm explaining here, your bias is going to change based on the belief system that you've created. Whether it's an indicator, we use price action, and then at that point, how are we going to place the trade? So this is the challenge traders face when they're using indicators. Whether it's a stochastic or whether it's a VWAP, are they using it correctly? But when you're using price action, it takes the mystery out of that type of analysis. If you choose to put a moving average or an anchored VWAP on there, understanding its limitations, its subjectivity, but also that it could become a self-fulfilling prophecy about what other traders and institutions are using it for. So I hope that helps. As always, if you have questions, email me, Greg@MasterTrader.